The International Monetary Authority has warned that any extension of China's lockdown measures to contain a COVID-19 outbreak could severely hurt its economy. In an interview with CNA, IMF's acting director of the Asia and Pacific Department said China risks missing its own growth targets.
In our baseline, we have the current lockdown ending sometime, in the very near future. And we have emphasized that a wider spread of COVID and further lockdown measures as one of the very significant downside risks for China. So yes, at this stage, it is unclear, but a further, aggravation of COVID could, in our view, push their growth, or let's put it that way, make the attaining of the government's very ambitious growth target even more ambitious.
Uncertainty around a resurgent pandemic, the war in Ukraine, and the trend of rising interest rates has prompted the International Monetary Fund to cut its projected forecast for regional economic growth. It says GDP will expand by 4.9% this year. Now, that is half a percentage point less than its forecast in January and below last year's 6.5% growth rate. Now, the IMF warns that Asia will face higher stagflationary risks with monetary tightening necessary for many countries. It says it is crucial that central banks deliver their policy intentions clearly.
Most of the central banks are looking also into communication of the policy stance, which will play a very important role in anchoring expectations. And the anchoring expectations is what will make policy actions effective and avoid excessive need for tightening.